welcome to Mel on the Street. I'm your host, Mel Schaefer, and today we're speaking with David Schulhof, founder and CEO of MUSQ ETF. Thanks for joining us, David.
Thank you, Melanie.
So the music industry has been on fire really this summer. I mean, you've got Taylor Swift's Eras Tour that's raked in the mega bucks. Live Nation's revenues are up. Spotify recently reported earnings that showed its subscriptions increased 21% year over year. What does this signal to investors, and what are you seeing in the music industry?
Well, first, certainly around live music, there is just an insatiable appetite to go and see live shows. You obviously have Taylor Swift and the Eras Tour, and you had Beyonce with her tour, and you had Morgan Wallen, and you had Luke Bryan, and you have, all kinds of artists from, hip hop to pop to country. So, and then you have the Sphere in Las Vegas, which has been an incredible, venue to see the Eagles and to see U2 and Dead and Co with John Mayer. So people want to go out. People want to, they're willing to pay up, and they're not really afraid of paying top dollar to see their favorite artists. So live music is certainly kind of its own unique aspect of entertainment. Families want to go out. And then streaming, 84%, according to Luminate, of all music consumption in the United States today is dominated by streaming. So if you look, there were 4 trillion streams in 2023. There were 2.5 trillion streams already for the first half of 2024. So people are consuming music not only through Spotify, but through Apple, through Amazon, through Google. So people just like to access music on their mobile phones. And streaming is growing at 11 to 14% in the US. It's growing as high as 25 to 30% in the emerging markets. So music just represents a very compelling investment opportunity. And obviously streaming and live music are two of the big revenue drivers there.
So David, you have a lot of history in the music industry. You know a lot about it. You founded MUSQ, the only pure play music ETF, about 13 months ago. When investors buy shares of MUSQ, what are they investing in?
So by investing in the fund, we're tracking the performance of the MUSQ Global Music Industry Index, which is a passively managed fund that represents all of the music companies across streaming, content and distribution, live music events and ticketing, equipment and technology, and satellite and radio. So by owning shares in the fund, you're tracking the performance of the index, just like that's what an ETF does.
And so what's your investment strategy, and what do you see for the music industry over the next 1 to 2 years, or even through to the end of this decade?
So we believe, Melanie, that music represents a very compelling investment opportunity. Music is undervalued. Music is underhyped. Music is undermonetized. If you listen to JP Morgan, music is the best content story in the history of the media business. Music is cheap compared to what you pay for HBO Go, for Disney, for Hulu. So it's almost half the price of what you pay. You pay $12 a month today for music to access 200 million songs. You pay double that to just have a selection of films, and you need to own a few different of those services. So music is cheap. Companies like Spotify are now raising rates, and that's why you're seeing earnings continue to deliver. Spotify crushed earnings the last 2 quarters because they raised their rates just by $1. So we're going to see continued interest in streaming, and that's having an impact on the entire ecosystem, because all the record companies are collecting 70% of the revenues that Spotify generates gets paid to Universal Music Group, to Warner, to Sony Music, etc. And so content is very tied to streaming. So as streaming grows, content is growing. It's no surprise, Melanie, that all these music companies are up 15 to 20% every quarter, because as streaming grows, they continue to deliver. So music today, if you read the Goldman Sachs report, there are 700 million paid industry subscribers. That number is going to 1.2 billion by 2030 in the next 6 years. Music today is an $80 billion business. It's going to be worth over 180 billion, right, across content, publishing, and live music over the next 6 years. Now, the last point I was making was you have 8 billion people on the planet who live on the planet. You have 90% of them, 7.2 billion, have a cell phone. Less than 10% have a paid streaming service today. So we believe that music is growing exponentially in all the markets around the world where people have access to cell phones. The entry point is de minimis to bring music into a different country. So we think music is really entering into a golden age. It's ripe for scale, ripe for distribution, and we have all these companies in our fund that capture all the growth and innovation around music.
So you mentioned film and sort of just comparing film streaming to music. Artificial intelligence hit Hollywood really hard last year. Will AI also be a problem for the music industry?
So music is always the first to disrupt, right? If you look back 30 years now, the introduction of Napster disrupted music, and then all the other companies, went into streaming following music. So, um, firstly, the benefits of AI far exceed any risks or associated with AI. So, artists today can create the most compelling new recordings using AI. They can create new songs, new recordings. They can sample. So obviously you have piracy, which is the biggest problem. And you saw what happened with deep fakes like The Weeknd and the Drake. But those are problems that are getting fixed. If you look now, there are two bills before Congress. One is called the No Fakes Act, and the other one is a no fraud act using AI in music. So these are bills that are going to get passed, and they're going to wind up providing tons of protection to the artist community. Because at the end of the day, what we need consent and we need compensation. We need to make sure that if an artist's voice is being used, that artist is consenting to it and that they're being compensated. Because the issue today is an interesting one. There's no federal copyright protection in your voice. Only the states have decided that historically. But now that's going to change once these bills get signed into law.
So some of the big holdings in your portfolio are big tech stocks. Can you talk about that a little bit and also some of the smaller stocks within the portfolio?
Sure. So first, all the companies in the fund to be eligible have to generate more than 50% of their revenues need to come from music, or they have to be a top five player in streaming or content or live music. So we have big companies like Spotify, like Tencent in the fund, and we also have Apple, Amazon, and Google as some of the big tech names, but those names are capped at 5%. So all the companies in the fund are all market cap weighted, and no big name can have more than 5%. Some of the other top 10 holdings are Live Nation, Sony, Universal Music Group, Warner Music Group, Sphere, Madison Square Garden. So we have companies, we have small cap companies, we have mid cap companies, and we have large cap companies. And there are approximately 40 companies in the fund. No company today can have a market cap smaller than $100 million, and it has to have average daily trading liquidity of $500,000 a day. And then again, no company can be larger than 5%. So that creates a really nice cross section of companies. More than 50% of the companies in our fund today are, in fact, international companies. So we have companies like HIM in Taiwan, Tencent. We have all these South Korean companies, Genie Corp and Kakao, the biggest streaming companies in South Korea. Companies like YG Plus, companies like Believe in France, CTS Eventum in Germany, the big live music counterpart to Live Nation. And then, of course, in the U.S., we have Live Nation and Universal and Warner Music Group, companies like Reservoir Music. And so we have a really nice cross section of small cap, mid cap, and large cap companies in the fund. Every quarter, the fund gets rebalanced. Some of the names that become too small get kicked off, or if they have a negative momentum score, if they've performed terribly, we kick them off. And then, of course, if there are new exciting companies that meet the threshold of having 100 million in the daily trading liquidity, then they're eligible. So every quarter, we have approximately 2, 3, maybe 4 companies that get added, and every quarter we maybe have 1 or 2 that get removed.
And so some of those international stocks, investors can't get access to those outside of your fund, correct?
Well, we're quite correct, because we're acquiring those companies in local currency, so they would have to set up local accounts and set up accounts in those territories. So MUSQ really creates a very convenient, liquid way to get total exposure to the global music industry between domestic companies and foreign companies across streaming, content, live music, AI, blockchain, equipment technology, and satellite and radio.
Awesome. So to wrap up, David, where can investors go to learn more about your fund?
Well, of course, they can go to our corporate website, musqetf.com, but I encourage investors to follow me on LinkedIn, follow me on Twitter, on Instagram, on Facebook. Those are the 4 areas. I encourage investors to sign up for our newsletter. Every week we send out emails. We have an investor webinar coming up next week on Thursday at 4:15 p.m. So if you sign up to our newsletter on our website, you'll get access to all these exciting things that we do. But I write, every day. So follow things I'm writing about around the industry, and look forward to having everyone as an investor in our fund.
Fantastic. Well, thank you so much for joining us. It's always great talking to you.
Thank you, Melanie.